Here come the numbers now. And jobless claims coming in below estimates, 366,000. So this trend seems to be accelerating in the jobless claims, where those numbers are coming down further and further, well below that 400,000 level. PPI, just very quickly going over that. November, 0.3% is the gain, slightly above estimates. For core PPI, up 0.1%, below what the forecast was for a gain of 0.2%. And Empire Manufacturing coming in much better than expected. 9.53 is the reading. The reading expected initially was for a reading of 3, and that again is for the month of December. So these are some pretty good numbers here on the jobs front. Dom, what market reaction are you seeing right now?
Well, Betty, pretty good describes it right now. You can see a lot of green across the board. S&P futures advancing to their highs of the session, up about 12 points. They were up about 9 points going into these numbers, so 3 points on the S&P. Dow Jones futures near a gain of 100 points right now. NASDAQ futures also helping the advance, up about 20 points. But like you can see here with the S&P futures, we've seen a move towards the highs. And as you can see right here, I'm going to zoom in this for you right here. We did see that little spike up here as those numbers came out. So 1219 on the S&P. This is a good sign for the economy here. Remember, 3 straight days of losses on the S&P. This could be what the doctor ordered, at least for the bull camp. Also want to keep an eye on what's happening with euro right now, because we've been keeping an eye on that 1.3000 level, $1.30 in euro. You can see right there, still above that level, and has been above that for we'll call it most of the session right now. That's your unchanged line at about a 1.30. You can see moving towards the highs of the session again there. And, of course, Treasuries, keeping an eye on the 10-year yield, still below that 2% mark, about 1.89%. So we'll keep an eye on that as we head towards the opening bell. But right now, those bullish numbers, Betty, adding some more fuel to that bull fire.
And staying near those session highs for equity futures. Mike McKee, economics editor, what's the real deal here? We've got jobless claims trending downward here.
Yeah, although this is the season, as they say, when you have to be really careful with jobless claims, because it gets very hard to adjust them for seasonality over the holiday periods. We get a lot of holiday shortened weeks. Still, the trend is really, really good news and should excite people if this is maintained, if there is truth to it. And we do see the non-seasonally adjusted numbers did drop quite a bit. Then we're going to see some much stronger hiring going into 2012. Of course, we saw this in December of 2010, and it didn't pay off so much this year. Also want to look at Empire Manufacturing. This is really good news. We had some better than expected manufacturing data out of Europe today that's helped push the euro up. It looks like manufacturers around the world are doing very well, because not only did we see a rise in the overall index, 3 times what was expected on the Empire number, but orders and shipments jumped. There was a slight rise in employment, and future activity, their index of that, also higher. Interestingly, there was a special question on prices, and they expect them to rise, manufacturers say, into 2012, but we didn't see much in the producer price index here. A slight rise in energy, a big rise in food prices, and a rise in prescription drug prices. Shannon Pettypiece, that's your fault. We're going to blame you. Prescription drugs up on the year, but a very small increase on a year-over-year basis. And ex-food and energy unchanged at 2.9%. Important because the Fed is expecting inflation to moderate in 2012. Looks like, at least for a month, they're on the right track, Betty.